Hello and welcome to AMAGI, co-hosted by myself, Dylan Moore of the Volitional Science Network, which you can find on YouTube, and Nima of economicsjunkie.com. We are here to tackle ideas, both ancient and modern, in an effort to bring you the tools needed to expand the power of your worldview, making you a more potent entity, professionally, politically, philosophically, or otherwise. We are graciously being hosted by the Think Liberty Network, which you can find at think-liberty.com. And this is going to be episode 25, The Private Banking System, ... question mark. So, hey, Nima.
Yeah.
So you and I were having a very interesting conversation earlier today where we just got on the topic of what the private banking system means now that we have a much more grounded understanding of modern money theory, or MMT. And it's quite a bit different from what the Austrian viewpoint would have it be.
Yeah.
Yeah?
Or the neoclassical viewpoint in general.
Yeah.
Which is the loanable funds hypothesis, which says that people deposit money in banks, and then the banks take that money and distribute it to the private sector or to whoever wants to borrow it. And that's not really how banking works.
So how's banking work then?
Yeah.
What's this private banking system? How private is this private banking system?
Yeah, it's about as private as a mercenary corporation like Halliburton that is hired by the government to blow up Iraq, which is not very private, really. One could almost argue that it's the worst form of public spending is to let the government get involved in something and then let them hire private companies who work for profit and who have profit motive and let them go wild. That's basically what we see in military affairs all the time. And the banking system, if you understand how money creation works and the banking system works, it's very similar. Yeah.
So we've talked about that before, where essentially the economy as we know it, because we understand now that the statist/credit theory of money, that money creation is a top-down command structure system from the government. And what money creation does, whenever the government spends money, first of all, they spend it into existence. And when they do that, what they're doing is they're moving resources from the private sector to the public sector. And the fact that we have a market or an economy is a side effect of that.
Yeah, historically, that's a fact. Historically, that's how the private sector has emerged, right? It's been through military campaigns that the Romans and the Greeks, and probably even societies before them, found out that it's much more efficient to have a monetary system to do their conquests, because it's very complicated and it's a very big undertaking to meticulously plan every single detail of how we're going to take care of an army.
And then can you recap, because you mentioned that these ancient civilizations have been using this money system to conquer peoples. Give us an idea how that looked like again.
Yeah. So David Graeber writes about this in Debt, the first 5,000 years. The Romans and the Greeks, they happened to use gold as the transport medium, as the metal to stamp the coin values on. But they also had, whatever the state declared good enough for settlement of tax liabilities was a currency, and at times it was gold and silver that they accepted. Gold and silver coins they accepted in tax payments, and those coins that were acceptable in tax payments always circulated above the metal value of the gold and the silver. but generally the way they would do their conquests would be the government would impose a tax and then they wouldn't impose a tax in a currency, and then they would spend that currency into existence and pay their soldiers with it, and the population that was conquered would have to pay the tax in that currency, and or the domestic population would have to pay the tax. And so the soldiers could buy stuff from the people who needed the money to pay the tax very conveniently, because the money was in universal demand, because the medium that is in universal demand for the payment of taxes is valuable through the force of the government. So they would send these soldiers off, pay them in the currency that has become valuable because of the tax, and soldiers would buy weapons and food, and the horses could be fed, etc., etc. And the people who would supply the resources needed to feed and to shelter and to clothe and to arm the soldiers were basically what we call today the private sector. That's how private sectors came about originally.
Right, and this
They're basically an afterthought of military conquests.
And this is much more efficient, as you said, than just saying, okay, we need so much food and so much horse stuff and so many whores and so many, weapons. Let's just go to the city and take it all and extract it from them. Well, first of all, it's more difficult, and second of all, if you let people create a market, they'll make more stuff to steal.
Yeah. Yeah, you basically give people a little sandbox to play in. And if you let them play within the confines that you've provided, then ideally they think they're free, then they'll come up with some great stuff. They'll come up with some great technologies that the public sector can then siphon off or utilize for their own purposes, which are oftentimes very different from the consumers, from satisfying consumer demands. And we see that today with things like, when Facebook first came out, Google first came out, oh my God, how awesome is it that we can search and that we can put all our our entire histories online and share it with each other. But what's really transpiring is, well, it was all just so the government can make use of the data, and the technologies that were invented along the way help the CIA and the intelligence agency in general achieve their purposes. And the fact that consumers had some fun with it is more of an afterthought, and it's also very convenient for those in power to let the people think that they are free to develop and invest in whatever they want.
So how does the ancient model, which we just described, correlate to the modern system that we have today, specifically looking at the, in quotes, private banking system?
Well, the banks are basically lending agents of the state. The state imposes a tax in US dollars, and for that reason the US dollars become valuable. And for that reason, the state can hire people into the public sector. In other words, move resources into the public sector. And people will gladly work for that currency. And the state also can now lend that same money into existence. They can just tell people, okay, here, I'll loan you $1 so you can hire workers to build a bridge or whatever. And what happens in the modern economy is just the state has delegated the lending to the so-called private banks, which are really just the lending agents of the state. They're licensed by the state, and they loan money into existence out of nowhere. And when people write checks to each other, then the banks have access to the central banking system to to deal with clearing drains, and it's all basically part of the government system. It's just that the banks have some freedom to decide who to lend to, etc.
Well, and now that's the argument, right? Because if we were to say, okay, we understand that the government makes money, why not just have everybody go to the government whenever they need a loan or slash for money to be generated for something that they want to do, whether that's a business or buying a house or whatever?
It actually happens a lot. I mean, historically, that was how it was done many hundreds of years ago, maybe even thousands of years ago. The state would just do the lending. Even today, there's still lots of countries where you just have state banks doing the lending.
Well, and that actually went up for vote in Switzerland not that long ago. Do you remember that?
Sorry, I missed the first part. What was it?
That actually went up to a vote in Switzerland to get rid of the private banks and go back to the state just being in control of all the lending. It failed, but it went up to vote. Yeah.
I mean, is that the Vollgeld initiative?
So. I think that's what it was.
Yeah. I mean, there are some arguments for the banking system
to not exist,
to be semi-privatized. Well, to be semi-privatized the way it is right now.
Yeah, let's go over some of those.
Well, the idea is that you let banks compete for the profits they make from their lending activities, and so you hope that they are innovative and they fund innovative and profitable projects. And so that way we have, because the free market is great and blah, 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 we have better outcomes. That's the hope, at least,
Right, yeah. Let someone who's profit-driven in a quasi-private situation make the decision of where the money creation is going to go.
Right.
The argument being that the private sector is going to utilize the resources better than the public sector. However, we run into a problem.
Right, we run into a problem because these banks are in a privileged position. They do not lend their own money. They create money out of nowhere, and they can do that because they have been given the license by the state to create money out of nowhere. Anyone who does that, who's not a bank, will be arrested as a counterfeiter. Secret Service will show up at your door and arrest you if you do that. And so that enables them to do irresponsible things, and that potentially facilitates irresponsible behavior. And we see, and also in our series about Minsky, we talk about how when we have a stable economy, the more stable the economy is, the more risky people become and the more leveraged people become. And the the public-private banking system is prone to a risky behavior, to feed into that risky behavior. So what we see happening is that people go from from sound hedge positions to more speculative and ultimately Ponzi positions, which basically means that they borrow more than they can afford to pay in the end, so they go more and more in debt. And the banks make profits from the interest payments they make, but also if there's securitization, as we saw in the housing crisis, they just originate and then try to sell their loans as quickly as possible. So there's all sorts of schemes that would not naturally occur in a truly free market that the banks can conduct. And that is why some people argue, and I think we've argued, that the banking system needs to be regulated by the government, and the lending activity by those banks needs to be regulated by the government, because the governments have given the banks the privilege to do this kind of work.
I had a question, and it just slipped out of my mind. It had to do with, so you brought up at the beginning, comparing this actually to mercenaries that work for the government. because this is a common libertarian theme, and I happen to completely agree with this. Is that we could say, okay, the private sector will manage resources better than the public sector. However, the worst possible thing is to have a private sector organization that gets nothing but government money.
Yeah.
That's nothing but a government contractor.
Yeah, you have a contractor like KKR or Halliburton, which pockets all the money and then some. I mean, they made money in the Iraq War. They made more money the more expenses they had. It was called cost plus, if you recall, where any devices and cars and machinery and etc. that they ordered, they just charged the government a certain amount, like whatever, 20% on top of that. So then you had, with the end result being, you had like contractors driving around in completely pimped out Humvees with entire sound and entertainment systems inside that nobody needs to fight a war. And you can sort of draw that same parallel with the private banking system.
Well, there's another parallel that we could draw, which is that when you have a bunch of mercenary groups that are hired as contractors for the government, what you've done is you've created an entire private industry that needs war. So you have this entire private industry that wants to lean on the government in order to generate more war so they can get paid more. Well, if you've got an entire private financial industry that needs speculation and bailout.
Well, in debt. They need people to be in debt.
Yes.
So that's the reason why the banking lobby has always favored policies of austerity. That's why, in part, also, they've always favored the gold standard. Carol Quigley writes about this in Tragedy and Hope, that when the government pursues a policy of austerity, which is basically a policy of balanced budgets, then that means that the private sector runs out of net private savings and will go to the banking system to get the money they need.
Well, yeah, and then who wins out of that?
Go in debt.
The banking system, and then I think this is also worth pointing out, is that there's always this question, and you brought it up at the beginning, where the traditional / neoclassical idea behind banking is that banks are lending out deposits. I mean, even if it's a fractionally reserved, banks are limited by their deposits in order to lend. Now, what we've seen, particularly in the last crash, is that, and people blame Glass-Steagall for this. I don't know entirely how responsible Glass-Steagall was, but I mean, for the sake of argument, we'll take it, that they were taking people's private deposits or individual deposits and using that for their commercial speculations. And then after they turned around and they lost all the money on these commercial speculations, or I guess commercial Ponzi's, they went to the government and said, look, you got to bail us out or everybody is going to lose their money.
Yeah, those were the shadow banks who were essentially doing business or doing activities like the regulated banks, but they were also pursuing more speculative ventures. And then after it all blew up, they went to the government and said, yeah, you have to backstop us, just as you backstop the regulated banks. However, the idea was that, well, if the bank is regulated by the government, then the government backstops it because they're regulated. But if the shadow banks do unregulated activities, they don't really deserve that same backstop. They should just have gone out of business.
Right. Well, and then this might be part of my confusion of what actually happened in 2008, but didn't that also involve not just the companies that would go out of business, but some private individuals that this wasn't the fault of at all would have lost out a lot on their savings, right? Right.
I mean, the banking system is just a scorekeeper, and if somebody gets paid for work they've done, then their score is sort of, they deserve to have their score on their scoreboard.
Right.
It's not, there's no point in saying, well, now we're out of points on the scoreboard, we have to remove some of your points because some bank went bankrupt.
Yeah, well,
so,
that's the point that I wanted to get to. Whereas if we recognize the fact that money is just points, and the Federal Reserve
really
and the private banking system keep track of points.
Yeah, they keep track of and they assign points.
Right.
Also.
So
you assign points to someone if they have a worthwhile project, for example.
Right.
Like capital development of the economy.
But here was my suggestion for a regulation, which is to keep people's points separate from whatever commercial / speculative venture that any financial institution might go after. First of all, because the individual doesn't deserve any failures that the financial institution might incur. But second of all, it splits them apart, right? So if a shadow bank goes out and does a bunch of stupid stuff, speculates all the money, gambles it away, and loses it, for them to run back to the government and say, okay, you need to bail us out because Joe Schmo is going to lose all his money, just completely remove that incentive by saying, look, okay, that's his score, and the government keeps track of that and makes sure that money is protected, and the financial system isn't going to implode and he's going to lose his money, and keep it disconnected from that commercial activity.
They could have done that. They could have just transferred his points or his money to a regulated bank. I mean, there's also the argument, well, why did Joe Schmo have his money in a shadow bank? It was probably because he was greedy and he was trying to squeeze out some extra interest. I mean, for the regulated banks, the solution is very FDIC, so deposit holders will always be made whole. For exactly that reason that
$250,000.
Up to $250,000. However, that's an arbitrary limit. The
Correct.
system would work just as well if you didn't have that limit. In fact, it would probably reduce the demand for treasury bills a little bit, because treasury bills are the way you get around all of this stuff. There's no such thing as an insurance limit on treasury bills. That's why when people have a lot of money in cash, they buy 1 year or whatever less treasury bills, because they are basically they're better than cash, essentially.
Right.
And but I mean, for example, Germany in the 2008 financial crisis, I think they just flat out declared, okay, we're now going to insure all deposits. So, and they can just, I think for some people it was kind of startling to see that they can just do that, but that's because that's how the system is supposed to work. Technically, all deposits should be insured, and a lot of
it's just
jitters
a scoreboard.
and fears.
It's just a scoreboard.
Yeah, a lot of fears would be exposed as irrational and nonsensical. If people if the regulations and the laws were such that they recognize how the system actually works and functions. Institutions understanding how the system works would also help when it comes to the central banking system and the reserves, because the way laws are written and the media reports and people think it works, even people who work in the profession, they think that the private banks need reserves from the central bank in order to lend them out. But, I don't know if we need to go through that again, but as we've discussed many times, it's just not how it works.
Right. Well, and then I wanted to ask you what you think could be made different about the current situation that would recognize the fact that the the banking system is just a bunch of scorekeepers, and they assign points to things that are supposed to be worth assigning points to. What's something that we can do to keep the financial system from going crazy? Like Halliburton goes crazy in Iraq.
Yeah, that's a good question. So Minsky writes about in financial reform, one aspect should be that the banks, when they need to obtain reserves for clearing, which is what they actually need reserves for. Okay, they don't need reserves to lend them out. They need reserves to meet clearing demands when one bank writes a check to another bank, or when somebody makes a cash withdrawal, or which is minor, not really significant, or when a tax payment is made to the government. And in order to meet those clearing drains, they currently just go on the open bank lending market and borrow reserves from other banks. And the Fed just sort of intervenes in that market by selling bonds to raise the interest rate above zero, where it would naturally be. And instead of that, the banks should go to the central bank directly and borrow the reserves directly from the central bank, or obtain them against collateral or whatever. This way, the central bank could review the bank's books and review and do what they're supposed to do as the super bank that they are. Because in the end, it's really just the private banks are really just the central bank's lending agents. And so it's kind of ridiculous to let the private banks do very risky activities, and the Fed is just like, well, we don't know what they're doing, Well, yeah, because you're not looking at their books, because you're not using the powers that you have and taking the responsibility that you should be taking, given that you're the ones creating the reserves. So that would be one thing, and that would basically go hand in hand with more reasonable lending standards, which is, obviously it's an easy phrase to say, but what are reasonable lending standards?
Yeah, that's a tough one. But I think, how about this? Let's start at something obvious and maybe work our way towards something a little bit less obvious. So, part of the 2008 crash involved liar loans. So essentially, when a bank loans out money, they're supposed to check and make sure that you can pay it back. And when they asked people, okay, how much income are you making? People would write stuff and the banks wouldn't check. So what that means is
you can't make it any more obvious.
Yeah, you're having money creation with no stops whatsoever.
And I would go further. I wouldn't say it was part of the banking crisis. That was the root cause of the banking crisis. At the peak of, I think, in 2006, something like 60 to 70% of loans, if I'm not mistaken, were liar loans. And it wasn't just subprime loans. It wasn't just subprime mortgages. It was all kinds of mortgages where liar loans were involved. So yeah, that's something you would avoid by letting the Fed examine the bank's books. Of course, okay, if the Fed is, the people at the Fed are responsible, which of course they're not. But given that we have this system, that would be the way that it would have to work. That would be where all eyes should be pointed. That those should be the people held accountable. The people at the Fed should be held accountable if they allow a bank to make risky loans. And then another thing that could be done, I think, and this is also going back to something I read that we covered when going through Minsky, is that the Fed needs to stop trying to steer the economy by raising and lowering the interest rate all the time. The natural interest rate at the Fed should be $0 or something, maybe 0.25%, just so there's some incentive for the bank to make some profit, because that makes them, that forces them to make loans to profitable businesses, and that's something that's generally good for the capital development of the economy. And that's the purpose of the banking system, really, if we go back to its origins. To allow the economy to, that's a very broad way of putting it, to hire people into activities that go towards building machinery and computers and productive devices that are not immediately consumed. That's really the purpose of the banking system. And if the Fed stops meddling with the interest rate all the time, stops trying to raise the interest rate to clamp down on lending, then banks would be much more in charge of the capital development of the economy. But if they try to discourage credit creation, if the Fed or the government try to discourage credit creation by forcing rates up, or to, like in 1980, they went as high as 18% or so, because supposedly they wanted to reduce lending, then the private sector will try to find ways around that, and that's when the shadow banking system kind of emerged. So if we just didn't meddle with the interest rate so much, then private entities wouldn't try to create shadow banks to circumvent the existing banking system, and then that would lead to less speculation. That would be another thing to try out to make the system more sound and stable. So those are just two things that I could think of at the top of my head.
Yeah, well, and then, I think the one that interests me the most is actually the first one that you said about Minsky, of the banks, instead of going to the interbank lending market when they need reserves, is to go straight to the Federal Reserve. And that way, the Federal Reserve is always seeing, okay, what are you guys doing? Or what are you doing, individual bank?
Exactly. Because right now, the Fed just sort of sits on the sidelines and buys and sells reserves to maintain a certain interest rate. So this way, they absolve themselves of the responsibility to monitor the bank's behavior, which is actually supposedly was one of their initial responsibilities. But this way they're sort of skirting, and probably they just probably don't feel like doing it, honestly. It's very annoying. It must be a daunting task to be in charge of the safety and soundness of your entire banking system. So they're just probably trying plausible deniability. But yeah, I think and that's what Minsky explicitly says, that would be one step towards a more safe and more sound banking system. Yeah.
So to recap, I think we covered that pretty well. What we're looking at in the modern economy, and I guess specifically the U.S. economy is what we've been talking about, is the government still imposes this top-down credit structure where they're the ones generating the dollars / the points for people. And they do so in a way that has nothing to do with the market. They just generate the points, move things from the private sector to the public sector, so they take whatever resources out of the private sector they want to do whatever they want with it. That leaves money in the system that you and I can run around and make a market with, and the private banks are simply an extension of that.
Well, the private banks are just, the private banks are just an extension of the government. Like, if you're an entity that can tax to give the token that you produce value, then you can also lend that same token into existence. Right? Instead of paying you to build a bridge, I could say, well, I'm just going to loan you $100,000 and you owe it back to me at interest. And the government could actually charge a very low interest rate if they wanted to, just say 0.25%. But then comes the risk assessment and your credit worthiness and stuff like that. And so in order to be able to in order to appropriately price the credit risk, they would charge some sort of interest rate on top of the risk-free rate. And that's just delegated to the private banks at the moment. So the private banks are creating money out of nowhere and then obtaining reserves later on when and wherever needed for clearing. Yeah.
Well, Nima, do you have anything else to add before we wrap this up?
Well, I think it's important to distinguish. So there's two different competing hypotheses here. There's the neoclassical sort of, which Austrian libertarians fall under in many cases from what I've seen. And there's sort of the MMT view. And each side has a fundamentally different origin story of the monetary system. And all the disagreements, all the conflicts go back to this one disagreement, in my opinion, in our opinion. The neoclassical story is that humans started bartering because, I may have 20 nails and you may have 5 shoes, or let's say you have 10 shoes. So I might trade, well, it makes no sense, 5 pairs of shoes. And so I trade, I trade, 10 pairs of shoes. So I trade 10 nails against 5 pairs of shoes, and so on and so forth. So whatever, the barter story is that, and the comparative advantage story is that if I have too much of something, but I want something else, and I'm willing to trade. And the idea is that that's how the private sector first emerged. So people just bartering this versus this against that, nails for fish, etc., etc. And out of it came the private market, and then out of that came the monetary system, because people identified goods that are ideal for barter or exchange goods, and then came gold and silver. And the others, and that leads to so many beliefs, and it leads to so many ideologies and so many notions of how our system today works, right? It really makes you think that the private sector can emerge on its own, and the government just came in to meddle with it. And the other view is that, well, the state imposed a tax and then spent money to existence, and so on and so forth. And then the private sector followed from that. So, and what we're saying is that the latter view happens to just be more empirical. Ultimately, we actually don't really know which story is true. And to me, to help me with my with my monetary decisions, my investment decisions, it doesn't really matter all that much. But what happens to be true is that the MMT view is much more empirical. It's much more historical evidence to back it up, and it also works much better in today's system. It makes me understand today's system much better. Why is there no hyperinflation in Canada with 0% reserve rate? Why was there no hyperinflation in the U.S. after the market was flooded with reserves? Why is the deposit insurance not inflationary? Why do deficits not cause complete and total economic doom at some point? And why does austerity always lead to speculative booms and subsequent busts? And all these things are perfectly explained, perfectly lined up with MMT, not so much with the other view. So what I'm saying is that the disagreements always go back to these two completely different origin stories of the monetary system. if that makes sense.
Oh, that absolutely makes sense to the point where I've heard it a few times, and it makes sense more and more every time. Because
I talk about the same shit all the time, right?
Yeah, well, and I feel like I understand it better every time I talk about it, because it's like, oh my god, this is really the thing that's separating everybody. This is like this is the originating point that all the differences stem from. Is this disagreement right here?
Yeah. And it goes even further, because the conspiratorial worldview, right? There are some people who ridicule us for the conspiratorial worldview, which says there are big, powerful foundations and corporate foundations and nonprofit organizations and aristocrats who, through secrecy and through intelligence agencies, control government policy and thus control money creation as one part of their control structure. And the other view says that, and in my opinion, the conspiratorial worldview perfectly fits with MMT. And then there's the other view that says, well, everything just sort of happens. We're stumbling through the world. Politicians are stumbling through events, trying to do their best, or trying to, or just trying to be profiteers in a organic organism that is the private sector or the economy or whatever. And so from that standpoint, the conspiratorial view doesn't make much sense, right? Everything sort of emerges in an evolutionary manner, and companies try to be profitable, try to invent better products all the time, et cetera, et cetera. So that's also a corollary of that schism, I would say, is that our world, I think, is much more planned than most people think. It's so much more planned that when you look behind the curtain, or when you peel the layers of the onion, you realize things that you could not have fathomed beforehand.
Well, and I feel like, sorry, go ahead. I want to say something.
Which is that we live in a society that was planned hundreds and hundreds and thousands and probably tens of thousands of years ago. And it was planned from the top down, and it was written about by authors and philosophers and historians throughout time. Plato wrote about the perfect state, which is, a expert state, or what he called the philosopher's state, a top-down planned economy. And I think we just still live in an economy like that, and it's just important to recognize that. And the banking system and the government, treasury, and the monetary system are one aspect of that control mechanism. And by the way, as you all know, there are, I think, 5 other aspects of this control system, if you remember.
I'll probably recognize them when you say them. What 5 specific ones are you thinking of?
It goes back to the, and this is also what I'm reading through right now, Carol Quigley's The Evolution of Civilization.
Oh, you're talking about his levels of abstraction?
Exactly.
Yeah.
The dimension of abstraction. Yeah. So the monetary system, and which is what we cover when we talk about MMT, etc., is one aspect of that power structure. But, we also have the military, and the political, and the social,
and the intellectual,
and the ecclesiastical, or the religious levers, where they manipulate and pull strings in order to accomplish their objectives. So, in other words, there's a big plan, and the people behind that big plan are well aware that the way you control society is through these levers, and they devise plans to steer and prod society in the desired direction by pulling and pushing on these 6 levers. And the monetary system and the economy, which is the monetary system essentially, is one of those levers.
Well, and then with MMT, going on what you're saying here, because it's so simple, where, I mean, there's things that make it more complicated, but in essence, MMT is, do you have austerity or not?
Exactly.
And when you understand that it's that simple, what that means is the planning is that simple. Where if a planner's saying, okay, do we want this country to be economically good or economically bad, all they have to do is turn that austerity dial.
Yeah, do we want them to deliver us the technology that we need to rule and oppress everyone, or do we want to kill them off, or do we just want to, well, maybe they run experiments, or what exactly they're doing, of course we don't know, but you can totally see that whenever it seems to be desirable for some country to grow,
it grows.
It grows, and the IMF is not concerned about their giant budget deficits. See China. When China was growing, and I think they still have this, they had budget deficits of something like 10% of GDP, and nobody had a problem with that. And it worked great.
Sorry, let me say, it worked great. China has gone from like this barely feed itself communist nation to as close to first world as a communist, central planned economy is going to get.
Right.
A billion plus people taken out of poverty.
Right. And Africa is, of course, completely controlled by the IMF, and there's constantly restrictions on how much these governments are allowed to borrow, etc. So it would seem like the plan of the planners is to kill off the African population. We also see in Europe, where in Greece, for example, it seems to be a huge problem that Greece has a budget deficit of 3%. So for some reason, they need to be at a 1% budget surplus by 2020 or whatever. I mean, I know the IMF had some plans mapped out of that kind. So and the media talking point, I mean, the media just delivers the appropriate talking points to make these respective governments do policies in that direction. In China, they just do deficit spending like crazy. Nobody cares. In Greece, suddenly they have to cut this and cut that. And
sell your islands.
Yeah, and in Germany too, I remember when there was a coalition. There was a red-green coalition that came into power in 1998, which is supposedly like social democratic, supposedly left-leaning. But suddenly, the talking point was, well, we have to save money. The government called it. This is our. We're on the course. They called it the Sparkurs, and they had a finance minister named Hans Eichel who was suddenly very keen on saving money, which is. Not
exactly what's happening here right now from the Democratic side. The Democrats, who are the big spending mofos, are suddenly wringing their hands about the budget deficit.
Yeah, and the Republicans who had a huge problem with Obama running a budget deficit of $1 trillion or something. And threw a giant tantrum about it, made a sequester and changed legislation and cut spending. Suddenly, they have no problems with the Trump government running big deficits. Which is the correct view, but they were being hypocritical under Obama. There was no need for them to push for austerity under Obama. I think
it shows, for at least for the American political side, is at each side at least has a rudimentary understanding that the budget deficit, it doesn't have anything to do with, being responsible with finances. It has to do with nerfing the other side.
Yes, it's a political tool. Exactly.
Okay. I think we covered it pretty well, Nima. Let's wrap it up and get out of here. I'm Dylan Moore with the Volitional Science Network, which you can find on YouTube, and this has been with Nima Majur of economicsjunkie.com, and this has been AMAGI, which you can find at the Think Liberty Network at think-liberty.com. Thank you again for listening, and we will see you next time.